Darius. So I worked in the traditional finance industry for over 10 years. Currently, where I am now is in the wealth management space. For the good part of my career, it has always been in the asset management industry. So really looking at customizing solutions for clients, for investors, to come up with solutions to help them accumulate wealth and preserve wealth. So that has been my background, and I think the whole DeFi space has been interesting. It's been an area that I've been dwelling in for quite a while or so to see how it can actually complement the traditional finance space. So I think today's topic is pretty interesting because I think most people are looking at DeFi pushing the traditional finance pie or cake. They're eating up the cake a bit. So today I'll share my thoughts around that and see, if you have any questions, happy to also address them. So Faith, should I just proceed ahead?
Yes, please. Thank you.
Okay, thank you. Right, so let me share my screen. Okay, is it working out for you guys?
Yeah,
Yes.
it's
Okay, all right, thanks. Right, so I think today's topic is quite timely, right? Given how the DeFi has been so robust in terms of growth, in terms of how it attracted lots of money over the last summer, right? I mean, people are talking about the winter now, and winter is almost over and so forth. But I think we want to look at it holistically, right? To see whether ultimately this sector or this trend is going to continue, right? And really today's point of view is not to give you a yes or no direct answer. It is more of the situation now, and and see where are the opportunities that could come through for DeFi. Right. So the brief introduction I gave of myself already. So what about this session? Effectively, if you compare to the previous sessions that you have, which I learned from Winhan, the previous sessions were pretty interesting because it really helped you in some ways that you could make some quick money, or you could generate more revenue or more money for yourself in terms of wealth creation. But this session is different. Really is in terms of what we are going to talk about. It's not a session where you can learn to make quick money, right? But ultimately, it is a session where we're going to talk about the fintech penetration to the traditional finance space, right? It is an industry that most people acknowledge hasn't been really disrupted by technology, as with how we have seen in other sectors, right? So this is one thing that we're going to talk about, right? And in terms of what kind of money that we all can make out of this, right? One way is always through investing in some of those crypto projects and you make quick buck out of that. Or the other way to look at it is really the time that you spend, right? In terms of investing your time and how you generate returns from there. Right. In the traditional finance world, we always have a joke when it comes to investments that we make or investment costs that we suggested. Right. For example, I mean, most of the people will tell you we want to recommend a company, a stock, right? XYZ company that can give you a returns of 20-30% in the shortest time frame possible. Right. So if you buy into XYZ company and if within a week it pops 20-30%, right? Whoa, everyone will say that, whoa, you are the great stock picker, right? You are the best stock picker. And most people out there will tell you, see, we told you so, you should buy it when we suggested. Right. But what happens when things go the other way, right? When the stock price drop 10%, then you realize that most people will tell you, oh no, we're actually looking at it from a longer term investment horizon, right? We're looking at this XYZ company with you putting money for 3 years. And if it doesn't go in the direction, they will say, oh, maybe 5 years. And for all you know, soon it become 10 years. Right. So ultimately it is about investment horizon also, right? But for you guys, being in this space, you are actually putting your investment horizon into the crypto space, into the blockchain space, right? Which should help you generate, a positive return over time. So the question today that we're going to talk about is DeFi really eating into the TradFi's pie, right? So that is yes or no, right? And I think this picture is pretty timely when it comes to whether you are choosing that pill, right? So we all know this has come from Matrix, right? If you took that blue pill, you're into that changing world, and then you're taking the red pill, then you'll be like guys like me that are still in the TradFi world as of now. Right. So is it the right or wrong? I think there are opportunities for both sides, right? And there are things that we're going to talk about later to really see how things could come together to allow the industry to boom. So the truth is that I think the financial sectors has many industries in place, right? So it's not just what we have seen, right? A lot of people understand finance when it comes to things that we interact more closely with, right? When it comes to banking, when it comes to brokerage, for example, trading, right? Be it the financial exchanges that we all know, right? And be it insurance that most of us would have buy in terms of coverage, right? So there are many industries that we do see in the financial sector, but is DeFi really hitting on every part of it? I would say not at this point yet, right? And the main thing that we'll talk about is really coming through from the perspective of what are the main sources of demand, right? To put it simply, when it comes to the concept of demand, right? The financial sector has many stakeholders, right? Has many participants, but the two main groups of demand that people always classify is retail and institutions, right? So retail is one area that pretty much a lot of attention has been focusing on, especially in the DeFi projects, right? Institution is another piece that we will touch on later. That it will be interesting for DeFi, and I think that this will be critical for the DeFi space to really boom from here. But there are also downsides to it if we look at it from that perspective. So first we go into the retail investors as a source of demand, right? If we think about the concept, as most of you would have heard from many lunch sessions or from other speakers, the DeFi concept is really targeting the space of democratizing finance, right? Giving people access to financial instrument, be it just to improve their life by buying things, right? Getting access to banking solutions, creating wealth, and so forth, right? So I think if you look at the different definitions that have been provided, by organizations or by articles and so forth, the general concept is the same, right? Is to provide access, right, to financial instruments, to provide access to banking solutions. That has been the main concept that I see in a DeFi space that works, right? Which is why it does attract certain groups of people in that space. And in the real world example, we do have that real world example, right? And if we could relate it back to how mobile payment in China really takes place, right? This is nothing new. I'm sure you have heard it in many cases, in many news report and so forth. Like why the WeChat, why the Alipay has really taken off, right? It is very popular, right? Mobile payment in China is very popular, right? Because there are two main reasons around that, right? First, because it is a mobile first market, right? Where most of the people in China that are using internet, they're using it on their mobile phone, right? So you don't really have to go through that phase of someone buying a computer, getting used to it, and then using banking solutions from there, right? So you are off that phase. Straight away, you have the mobile phone on hand, and it give you access to anywhere because you will bring the phone anywhere you go, but you wouldn't bring your computer. The computer stays at home, right? So that makes a big difference when it comes to the access and adoption rate. The second concept, which is more important, or the second reason which is more important, ultimately, if we think about China, it is pretty developed, right, in terms of the major cities. But there are still areas where access to banking or access to instruments is not as widely prevalent as the other areas, right? And ultimately, if we think about the concept of credit card, right, credit card is pretty much used in developed market, right? Not so much in emerging nations or nations that are trying to build out infrastructure, right? If we take a step back when it comes to developed markets, it goes through a phase, right? Everything goes through a phase. We start off with the infrastructure. You start off with opening a bank account, deposit the money, build up your credibility in terms of credit profile, and then you get to apply loans, you get to apply credit cards and so forth. So this concept is pretty much happening in the developed market, which is why in Singapore, for example, we're still using credit card, right? We're still using credit card alongside mobile payment, right? So because we are so used to using it. But if you think about the countries like China, China is the very good example, or even other countries that are coming up in terms of building out infrastructure in the emerging market space, they won't be going through this phase of opening a bank account with a bank, right? Because they already have a mobile phone on hand, right? That will be the first device that they buy probably, right? And they will just skip through this process of opening an account, depositing any money, applying credit card, and just go straight into mobile payment, right? So effectively, the technology enables it, it bridges the gap, right? And removing the traditional intermediaries that are happening, right? So this helps along in terms of understanding applying the situation into the DeFi space, right? So really, which areas are slightly impacted by DeFi so far? Right, I would say it was more towards areas where they have a direct relationship or a closer relationship with consumers, with retail investors, right? So your consumer finance, your banking, and even your exchanges, right, such as your Binance, FTX, Bybit, all the companies and so forth. So this you do have that direct relationship with retail investors. So chances are you will see the DeFi space hitting this area, impacting this area a bit more, right? We do see a bit more of the asset management um, coming through, right? These are true tokenized stocks and so forth, which is a bit controversial now with regulators looking at it, which is adding a bit of a pressure in that space. But that is a direct relationship with the retail investors, right? There are still areas which I think hasn't been really impacted by the DeFi space, right? Especially when you think about insurance, there are a couple of projects, right, like Unori and so forth, that are trying to revolutionize the insurance sector. But I think there is still some way to get there, right? If you think about you running a insurance protocol, especially to underwrite health insurance or life insurance, how is it possible that you will underwrite the risk if you don't know that someone, right? If you can't do the health check, right? So these are areas which I think will be harder for DeFi to penetrate, right? Because you really need to know the person and then the condition of the person before you will take on that risk. But there are other areas where the direct relationship is clearer. That's where I think DeFi has a bigger impact at this point in time. Right. And this is where I think much of the growth opportunities have been focusing on. Right. And there are of course all these other opportunities that the financial sector offers, but some solutions need to come in place to tweak around, which might go against the idea of DeFi, right? Because people will have to disclose more about themselves, right? To really be true DeFi, it might not be something that the community likes also, right? Then we compare this alongside, what TradFi offers along and what DeFi offers, right? So the direct relationship with retail investors, right? In the TradFi space, people always talk about, what kind of yields, the kind of interest that we're getting. No doubt the DeFi space has boomed a lot, right? Because the yields that are coming out, the returns, the interest that are giving out is so much attractive relative to that DeFi space, right? For example, on the left-hand column, you can see that what banks are issuing out in terms of what you have. If you have US dollar and you want to put it with the banks, it's going at really very low rates, right? That is a function because the market doesn't cater for that, right? And then you have the second column in the TradFi space, which is bonds, fixed income, right? This is an area where effectively you're buying financial instruments, you're lending to corporates, to institutions, or even to sovereigns sometimes, right? And they give you an interest on that. right? And then we have the whole spread of the DeFi projects that you see out there, right? Most of the time, you do see people compare stablecoin yields or stablecoin projects yields to the dollar of cash deposit yields, right? So they tend to compare something, oh, you can get 4 to 5% in DeFi. Why do you want to put your cash in bank where you can get 0 to max 1%? I in my view, I don't think that is a like for like comparison, right? Because effectively you still take on quite a lot of risk when you participate in DeFi in some ways, right? There's always that big bold line on protocols telling you do not put what you cannot lose, right? So I tend to look at it differently. I look at it that DeFi is closer to buying into fixed income instruments and more towards into the high yield space. And these are really instruments that people talk about it more like junk bonds, right? So these are non-investment grade. So the risk of default, right? Default is effectively the risk of you losing money is high. You're not getting back what you put in, right? Is higher. Right. So that is an area that I think could give you a better flavor of whether you see the money that you put on certain DeFi projects is actually giving you a right return, right? So for example, in the EM bond space, right, the higher space, 6.5% for a bond yield, I would say is pretty attractive, right, relative to what you can get from traditional instruments. And if you compare to some of those DeFi projects out there, like those on AAV, right, those on U, 6.5% is relatively attractive, right? And if you think about the Tradfi concept, you do have recourse if the bonds go into default to try to recover something that you have put in, right? But as compared to DeFi, where if things go bust, there's really very little that we can do to try to recover from there, right? But that's not to say DeFi is not attractive, right? It caters to a different risk profile, right? And the EM bond space, the emerging market bond space, is an example that I would like to use, right? Because you're taking risk, right, to get that higher yield, right? But relative to DeFi is not to say that there's no risk at all, right? If we compare the emerging market bond space, right, we talk about 6.5 being attractive, but if you look at the left-hand chart, the top chart itself, right, the yields used to be way higher, right? Especially, if we look at the COVID peak of the COVID crisis, it was going at double digit, right? So yields can go higher, but ultimately it has come off, right? Because the demand and supply concept also comes into the picture, right? People are pouring money into high yield instrument, and that drive down the interest that you can get, right? And ultimately, do they default? Which means in the similar concept of DeFi, it go bust. Yes, they do default, right? The default rate is about 3.8% when it comes to the emerging market company high yield bonds, right? And during the global financial crisis, right, the default rate went as high as 10%. And people also questions whether if you lend to a country, what are the chances of default? Yeah, of course, if you lend it to the US government, the risk of them not giving you back your money is low. But we do have history, right? In 1998, the Russian financial crisis, effectively the Russians decides to default on their loan. Right. So there are situations like that, right, that could impact the returns that you get through traditional finance instrument. Right. So this is where we want to talk a bit more about bonds, right? And honestly, for fixed income, right, there's a minimum investment of about 200 to 250,000. How many of us have that much money to buy into a single exposure? Right. That's why DeFi comes in. It gives you a attractive yield, and you don't have to put in 200 to 250K. Right. And debt instruments are really used by institutions. And this brings on to the next area that we're going to talk about. Is DeFi aiding traditional finance? The next source of demand is institution, right? This is an area which I think is going to change DeFi, right? If we want it to really boom, right? Institution is a big part of the source of demand for debt instrument. It is a big part of the equity market also, right? You can see that it accounts for about 70% of the stock trading volume. If we look at the OECD data, right, the institutions own way more financial assets, right, than what mums and pups on the street can own, right? And think about the wealth, right? There's so much wealth, but really, where is the money? Right, in Q1 2021, the US household wealth is 154 trillion. But where is the money? Right? The money is effectively in the gray line that you see, the blue line that you see, the two top lines that you see there, corporate and equity mutual funds, pensions and life funds. Right? These are effectively controlled by your professional investors, your institution. Right? That's where really the wealth is. And we just take a step back to think about before the whole sell-off in the crypto markets, right? You would have seen a lot of news that the institutions are coming to buy Bitcoin. The institutions are allocating to Bitcoin. This is why it is important, because they hold the big dry powder. They hold the money to actually push things further and faster, right? Which is why I think that institutions stepping into DeFi space, this is where it will be the big game changer, right? And why is it important, right? Because we just think about two situations, right? First, if you run a company that sells branded bags, right? Which news is more impactful to your shareholders? Selling a branded bag in 2 to 3 emerging markets, or selling the branded bag in a new market such as US, or selling it just in New York City? Which one will have a bigger impact? Right? I would say the second one will have a bigger impact, right? Because that's when you know that the proof of concept works, the commodity works. And we want to think that Bitcoin, Ethereum are priced or branded commodities or goods that we own, right? I mean, the picture there we have Cardano, ADA. That's a separate topic for discussion, right? But you could see that effectively when you target certain areas or certain countries where you're trying to democratize and providing access, it doesn't give that push and feel, right? As compared to a country like US approving or utilizing it more prevalently, right? So there's a different concept and sentiments when it comes around that, right? And importantly, for me, right, the second question, what do you find most difficult when buying and selling cryptos? Right? I find the most difficult part is the ramping in of cash, ramping in of fiat. Right? The buying and selling is pretty easy, right? It's just through the click, right, with of your the exchange that you work with or that you use. But the ramping in and the ramping out is the most difficult part when it comes to buying crypto, right? And then that's when it brings me to the next slide itself. Right? Are we nearing the process of where institutions could come in, right? Which would be the game changer when it comes to DeFi, right? And ramping in and out of DeFi is difficult in some ways, right? Because ultimately you need the framework, right? And we do see that there were lots of talks when the new SEC chair, Gensler, came about. People were saying that, oh, this guy knows his stuff. He's going to approve um, crypto for use in US. This is going to approve the first instrument for use by institutions and so forth. But then we more recently, we do see headlines coming through to say that SEC is looking to gain more power to try to regulate cryptocurrency. Right, and I think a framework is much needed, because the last thing that participants like myself or most people out there is to be associated with what you see in the picture there, a 911 incident. But I think it's not new to everyone that there has always been news trying to associate um how money laundering activities or even terrorist funding have gone through some form of cryptocurrency exchange. on chain and so forth. And that's the last thing you want that projects to be associated with, right? Because that's when it gives the regulators the biggest reason to say no, we're just going to stop it, right? So I would say framework is important. It gives confidence to more retail investors to come in, right? And that's when people get a bit more assurance that they're not going to too many scam projects, right? And that's when you also give the framework for institutions to come in to think that, okay, we know what we can play with, we know what we cannot play with, and they need to know all this before they can come in. But without such clarity, it is really hard for your large institutions to come in. But we do see players like the hedge funds, the family office coming into this market, right? Because there are lesser restrictions imposed on such institutions. But if you really want the pension monies, the insurance money, the funds out there, it is one that we need a lot more framework and guidance on what can be done from there. Right. And secondly, of course, we need the infrastructure. Right. I like to use AV as an example because there is the one that I've seen a lot where the attention of DeFi coming to institutions coming from AV. Right. And I think a couple of months back, there was also like an alpha leak. Someone actually went on Twitter to ask AV why they had a KYC check. And then it was addressed that, oh, they were testing out a concept for institutions. And we do see that coming through, right? And if we recall some couple of slides back where we were comparing the various DeFi projects from AV to Cream to Anchor to Orion Money, AV has one of the lowest rates when it comes to interest. And this is the function of demand and supply, right? Which is why I said there's a concept of ultimately, do we really want a full flood of institutions to come? Because when demand comes in, right, similar to what we see in AV, where a lot of money start pouring in, your yields are likely to come down. Then that's where we don't get the juice from so-called having our yields. Right. So this is something that ultimately DeFi needs to balance out. Right. But for talks of Bitcoins going to the moon and so forth, I do believe that the institution guys need to come in before we can see the next push and growth from there. Right. And lastly, are we nearing, right? The third point is really about instrument, right? There are crypto ETFs out there, ETP out there in the market, right? But they haven't been done in the US market, right? And ultimately, this is an area where investors are really waiting on, because for institution products out there, institution funds, it is really hard for them to consider a concept of creating a wallet and then start buying all cryptocurrencies or crypto projects and holding it from there, or getting someone to customize. It is a hard concept to get around that. Right? Think of the layers of approval they have to go through to open an account, to do KYC checks and so forth. Right? So the ETF is an instrument that will help to solve this problem, where they could just do an allocation through exchange and have the exposure. Which is why I think a lot of people are anticipating for the SEC's approval on the ETF product when it comes to cryptocurrency or Bitcoin. Right. So this would be a key tune, I would say, a key window also for potential framework to come through and for more institutional participation. And no doubt, of course, with the ETF, it would also open up more participation for retail investors. Right, so these are the key things that I see when it comes to whether we are on track to nearing for more institutional participation, right, especially in the DeFi space. Right, and I think that relationship needs to come in, right, before we will say DeFi is really pushing through in the traditional finance space. Right, so effectively what now? I think it's widely acknowledged that the penetration of technology in the financial services, the Tradfi space, is way overdue compared to other industries. Right? You could see that in the internet space and in the other sector, consumer sectors and so forth. Technology is just pushing it through, right? But the traditional finance space hasn't really seen much evolution from there. And that's when I think DeFi comes in and make things a bit more urgent for financial institution with that direct relationship or a closer relationship to retail investors to really start to rethink their business model, right, on how to re-engage them, right, and reduce the impact of money outflows from the assets that they're holding. Secondly, right, ultimately Rome wasn't built in a day, right? I would say don't expect DeFi to replace TradFi in a short period of time, but do trust the power of network effect. Right, the power network effect is important because you think about how the big companies in the tech space, like your Google, your Facebook, your Apple, and so forth, they all grow through the concept of network effects, where one person lead to another and so forth. It just grows from there. Right, and I think ultimately DeFi can go into that. Right, once you hit the retail investors correctly, and once you get a framework around institutions, it will just grow and it runs on a quite an exponential phase, right? And also ultimately it also means that we could just got to be a bit more careful when it comes to putting money in what kind of DeFi projects that we're participating on. Because I think ultimately we have many projects out there, it will still converge into just a handful, right, of winners in the market. And that has been the trend around how tech companies have evolved in that space also. And for you, do you have to be worried? I would say you're in a pretty good position, right? Ultimately, we'll say don't fight the tech, don't fight technology, right? Being in your position, you're already long technology, right? Which is why I think goes back to the first slide that we have, right? Why are you here today, right? Time horizon, being in your position, you are investing your time horizon, right, into this space, right? So you're already long tech. So that is good for you. Whereas for me, I will be struggling a bit to figure out how to position myself, right, in this disruptive world now, right, and how to participate, right, to be alongside tech so that we all ride together, right? And it is important, right? We compare companies in 2010 and companies today, right? Especially the top 10 companies by market cap now, they are tech companies, right? And you want to be in this space now because this is fintech, right? Right? If we compare it just about 10, 11 years ago, where are the biggest companies? Right? Your ExxonMobil, PetroChina, your Petrobras, your Royal Dutch Shell, these are all in the energy space. But we're not in that space anymore, right? Especially when it comes to regulations, right? We have seen how politicians, how the different governments are talking about green technology, renewable technology. That is a changing wind for a lot of energy companies, right? So you want to be part of the tailwind, right? And you can see that ultimately DeFi is pushing the industry to evolve, the industry to do better for the clients that they have. Right? And being in DeFi, I think you're pushing the traditional finance space to work harder, right? To be part of this changing process to adopt technology. Right. So I think you're in a nice space, right? And don't have to worry about so much about whether ultimately what's going to come your way. But I think right through the right through the horizon, right? We will all get somewhere, right? So when it comes to DeFi eating TradFi, yes, I think on the retail side, it does when you have that direct relationship, it is impacting TradFi quite a fair bit. But when it comes to institution where most of the financial assets are being held, that is the one that I see hasn't been really impacted. And for me, I would like to see a lot more coming through around that. And that is an area that will help to really push the concept of DeFi eating into the pie of TradFi, right? So that's my thoughts around whether DeFi is eating the TradFi space. I come from the TradFi space, right? Um, I mean, Yunhan would also know about my situation. I did try to I did try to get myself involved into it's one of those DeFi projects that most of us want, some of us want to get into, right? But I had a pushback from management to say that we cannot get involved in that, right? Because there's conflict of interest and so forth. But you do see that it is slowly people do recognize DeFi as part of finance already, right? And these are areas that I do see that we're no longer dissociating from there, and we just have to address the conditions accordingly. Right, so with that, I'll leave it the presentation is here and I'll address questions that you may have. If not, we could spend the rest of the time on Kahoot. Faith, should we go into Kahoot now or